my options Omega. And I use it mostly at this point to automate some trades, especially shorter term trades, maybe 2 days out, 5 days out, 7 days out. Even I have a 15-day calendar on here. What's nice is a lot of times I use it more for scheduling, get the thing on. Because if I'm teaching or if you're like me, sometimes you get busy during the week. It's nice to have the automation, especially if you back tested a strategy or something. It gets it on. And you could manage it yourself. You could put on some risk management on it, but I think the automation works well when you're not going to make an adjustment. But two trades I worked on, now I just put them automation on Friday, but they've worked historically pretty well in the options Omega uh, for short term double calendars in their community. But I've looked at these and I've ran these. So this was one I put on a double calendar and a double diagonal on Friday, right? So this shows you, I call it a Friday. I did a double diagonal and a double calendar on Friday. So here's what I did. They call it a 5-7. So on Friday, what would be a 5-7? Friday, Saturday, Sunday, Monday, Tuesday, Wednesday. So you're going to sell 5 days out. What's 5 days out? Wednesday. Buy 7 days out, Friday. You got me? So you're selling Friday, excuse me, selling Wednesday, buying Friday, right? So as a Friday that just happened, right? Sep 12th, you're looking ahead, selling Wednesday, buying Friday. How many would say, Dan, even though you tried to confuse that, I understand what you're saying. Friday that just passed, you sold Wednesday, bought Friday. Give me at least two people that say, Dan, I got what you're doing, right? So here was the trade, and you can see here, um, and I back tested it before, but it's basically, you can see I'm selling a 20 delta call. I'm selling a 25 delta put. So it's leaning a little bit long, which you kind of like on a long Vega trade. And I'm buying my wings and a double diagonal 10 points or on my longs 10 points further out of the money. So where it says sell 20 delta call, sell 25 delta put 5 days out, and you're buying your longs, the minus 10 and plus 10 here, it's just 10 points further out of the money. So it's a double diagonal 25 delta put, 20 delta call. I opened the trades at 255. So at 255 Eastern. So that's 155 Central every Friday, uh, one contract, you know, testing it out. So it says Friday, it tells you it was 65.99. Friday, Sep 12 at 2:55 p.m. paid $9.40 and just sold it a few minutes ago, Sep 15 at 9:41 a.m. Eastern, so 11 minutes after the market opened Central Time. Now, manual user exit, I just went in and closed it. I think I had a higher profit target on there or something different, but I closed it. Do you see this? 22%. It paid 940, sold at 1160. So that would be I wasn't, I'll be honest, historically in our community, for those, if there's any veterans here, have we done much on range bound on Friday? Yes or no? For any of the people that have been in here a while, yeah, it is me. We really haven't done much on Friday. And and these are shorter. These are definitely a little bit shorter term duration than we normally do. But in Options Omega, their community, it's more shorter, not that they don't do a little bit longer term, but historical, a little bit more shorter term. But when I tested some of these things and saw these 5.7s, um, they can be pretty good. Now, what I'll tell you is when you look at the graph, right? It's like, do you ever look at if you're doing a calendar before, let's say a month before or 3 weeks to a month before the earnings come out, and you're selling the expiration that expires before earnings, and you're buying the expiration that expires after, and you look at the graph, does the graph look great for a calendar? No, it doesn't. I mean, but if you look at these graphs, sometimes because you're selling Wednesday of this week and buying Friday, the graphs, maybe I'll show that in the afternoon, talk about it a little more, doesn't look as great, but they work pretty well. So this was the double diagonal. And then the other one I did was the double calendar. Double calendar, that was put on at 2:40 p.m. Friday. We were at 65.98, paid $14.35, closed it today at 9:41 at $16.50. So you made $205, which is 14%. Right now, obviously, when you do something like, you know, a 5.7 on a Friday, it's, yeah, you can do less capital than you would do on your normal trades, right? And I'd be happy to, for any of those who, I'll go over that more in detail, but you can see this one with the double calendar, it was selling at 20, so I was putting it on at 2:40 p.m. on Friday, Eastern time, selling a 20 delta call, selling a 25 delta put, and then I took the long 7 days further out. Oh, I'm sorry. So on Friday, I'm selling Wednesday, 5 days out. Remember, from Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, selling 5 days out and then buying the Friday. So every Friday, sell Wednesday by Friday. And I'm selling a 20 delta call, 25 delta put. And because it's a calendar, you're just buying the same strike. I had a profit target 50%, but you can see I just have it in there because it tested well at that. And then I have some exits in here using leg deltas. And I could show you, that's just like risk management. If the leg delta on the call, we could check that, or leg delta, let me see what I have here. So edit strategy. So I'm selling a 25 delta put and a 25 delta call. So I have like risk management, because just get out. You can see here let me just show you this. Do you see this? On the call side, when my 20 delta call hits 65, or on the put side, when the 25 delta put hits 65, exit. Yeah, these are Eastern time, Sasad. So what you're saying is, in any double calendar, when are there problems? When we go through the short strikes on the upside or downside. But what that also means is when you go through the short strike, when these in a double calendar, when your shorts go through the short strike, what is the delta of those shorts when you start hitting the short strike? So we start out at 25 delta put, 20 delta call. Let's take the upside. If we actually go to the short strike, what will the delta 50? So we're saying, hey, it's okay at the short strike, but if we go too far past the short strike on the upside, get us out. So these would be probably the same type of risk management I would do, where I would, where we would start getting into trouble, but it does automation for you, automated. And this is another good rail or risk management thing. Exit when the short long ratio is below 0.1, and uh, you can divide, basically it's dividing the premium between your longs and your shorts. And it's saying if most of the premium is sucked out of it, get out of Dodge, right? Um, so that's there. Um, what else can the back test results of the calendar? Yeah, let's see the calendar. And again, here's one of the things that's that we've been trading, I haven't traded the 5-7 as much, but double calendars are pretty good. Why do you think why do you think inherently double calendars, uh, why do you think in general, whether you do a 3-5 or a 5-7 or a 10-day double calendar or a 15-day double calendar, why do you think there's generally going to be a decent win percentage on them? Why do you think? And then we'll leave this and go into Amit's getting us back to the conversation, which is good. And I think those are good. I'm with Amit 100% on what he's thinking on these things with the market up. But why do you think? Why do you think if you back test, you know, a 10 or 20 delta iron condor over time, it'll do well? Why do you think if you back test a double calendar, double diagonal with low deltas, it'll back test over time? Because you get probabilities, right? So if you look here, this was one test uh, on the double calendar, um, tested it back 3 years from May 16th, 2022 to August 7, 2025. Here's where your entry, open the trades. Now I have profit target 50%. I have a hard time holding that long. You see, but what I like, you have some very good risk management on it. So you don't, you know, it's going to get us out when we would get out normally, but the machine is watching. That's the reason I do. And then you have some very stringent, because you can make back testing look very easy, but here, you're putting opening fees, uh, um, slippage, but this required, how many times have you seen, hey, if I could have got filled at that price? No, this is requiring, you need 2 hits at a price to get it. But this has got uh, win percentage, and you could look some of these up. Mar ratio, they have free back testing uh, course. You go to Option Omega uh, in their boot camp. Um, but you can see, you know, I knew it would test pretty well, but I wanted to make sure I put some risk management on it. So it tests well, and everything. So here's the test on it. But um, yeah, this is interesting. Assad says, I would have thought dealers mark up their vols. So there's not much edge on later Friday trades and holding over the week. So when you're saying Assad, you're saying dealers would be market makers? Let me address his 2 questions and then we'll get back to Amit. Um, I was one of those guys, a deal. I was never called a dealer, but market maker for specialists for over 20 years at the Chicago Board Options Exchange. And there's still, you know, a lot of sellers of options on Thursdays and Fridays. So when I was in the trading pit, you would just, demand and supply, you would lower the volatility on Friday. That's why it's usually up on Monday, is there's more sellers. But there's still decay in there, right? There's still decay. It is still 3 days. Uh, you can still make, some money, but you're taking the weekend risk. The other thing, um, I didn't put this here, but of course, any black swan events in there. I mean, first of all, are there many black swan events in a typical year? Are there any, are there usually any black swans in a typical year? No. So black swans, and I think it's just good to start out with the conversation. You don't usually have black swans, right? But and the other thing, would you say if there was a black swan or something, sometime a lot of times could it be tied to an event? Could it be tied to some kind of event? Um, Sometimes it can, right? Or news event. I mean, when it can move. So what I'm saying in the software, I don't think I have it in here, Assad. You know what I mean? But you can put in, they call it blackout dates. So you can test it in here. But see, that's the thing. I mean, how many times have we said in the community, we'll say, this event is coming up. Uh, this event is coming up. Um, CPI. And then I'll say in the community, I'll say, how many people remember what CPI did last time? I never remember. Most people don't. Well, you can test those dates. So a lot of people will put in, they call it blackout dates. You can test them, right? Test the data and see, okay, let me test this strategy with all the CPIs, all the FOMCs in, test them separately to see which ones affect the back testing. And then you can say, all right, the only one that seems to affect it is blah, blah, blah. And you can put blackout dates in there, right? Believe it or not, with some of the data, when they're doing these short-term double calendars, what day do you think that they've tested that they won't enter a trade on? Like a shorter term, 2, 4, 5 day uh, credit spread or double calendar. What day of the week do you think they found that doesn't test as well? Out of Monday, Tuesday, Wednesday, Thursday. Yeah, it's Thursday, right? Which I didn't, you trade it, you might have some thoughts. And I guess that would make sense, right? Because sometimes, you have Thursday FOMC, you have a lot more of the events, right? Or later in the week. Wouldn't you agree? Anyway, I just wanted to show this, not that uh, I had a couple winners, not that I waited for the week to a couple winners, but I just thought that the 5-7 again in small size and automated but to me, the key with these is, especially on a double calendar or double diagonal, exit. You know, the most important thing to me in here, I know they work because of the lower delta over time, but exiting on time when those shorts become in the money, when they go through the short strike, right? Whether it be a double diagonal or a double calendar. Now also, and then this one with the ratio, that'll protect you a little bit. Obviously, you want to be, we did these in a low vol environment. You want to be careful on the volatility. Um, Equity curve. Oh, you mean on the let's see. Oh, on this thing. Let's see, equity curve uh on this back test. So this takes you see that? So this would be over 3 years, right? Let's see, this is 2025, 2024, 2023. 2022 worked pretty well. I mean, just because you see this shot up, it was more of a higher vol environment, but overall it's a good strategy. It's just, I'm saying, as with any higher probability type strategy, the key is getting, decent risk management. Anyways, so with all that being said, um, looking at trades for this week, and thank you, Amit, for sharing. I'll bring up Amit's trade, but how many would agree? We get a low vol. We're around the 6,600 level. You got the FOMC Wednesday. Oh, sad. I'd have to go look at that maybe in mid 2024. And that's the nice thing. You can, when you're back testing, I back tested 3 years, but you can go aside and you can, isolate 2024 and then go look at the trade log and various trades. You agree? And which ones won or which ones lost and all that type of thing. A lot you could do there. But it's been, the back test or this automation is just help with scheduling, getting stuff on, and it's also been a help. For example, let me just show one more. Can you see my screen? So this is a trade put on. I forgot I even had it. I didn't know if I was going to do it today. This is a 30 delta, 30 wide iron condor that was put on today at 10:02. And we're already, just because I won't watch this, I'll watch this. I'm up 14 point, edit exit conditions. So you can see, I'll just do it live to show you. I can close that now. So it says that was put on at 10:02, 11 minutes ago, right? And it says close it. We'll see how close I get to being up 14% on it. I just wanted to show this. I would like to say I'd keep it a little bit longer on. Let me see if it got out of this. Did I hit that? Close trade now. Confirm. Okay, you see how it moves? So it's going in there trying to close the trade. All right, to close the trade, let me see what it, 30 delta. All right, not horrible, right? It got 12%. So it did the iron condor, sold the 6,600 strike, put 6620 strike call, and you could see it bought the, do you see that? It bought your wings 30 points away. I did it for a 6.25 credit. SPX was 6609, bought it back for 535 debit. You see that? I would have forgot to put it on. Amit, did you put one on today? Yeah, a lot of times I forgot. I didn't even know I had it on. I mean, I tried it before the opening. If it looks completely crazy, I don't do it. So we're kind of subjective. I'll talk to Meet or Mark, and okay, if it just looks like not much range today. Amit did the at the money butterfly today, the 65.90. For 235. How is that doing, Amit? That should, 15 points lower. Because we haven't moved much, right? So that should be starting to accumulate some money, right? But those are smaller size. Break even now. Okay. So anyways, I just wanted to, So you can see how many would agree, at least if you can back test something and it makes sense with you, you have some rails in when it rails risk management, if it goes against you, basically the automation would do the same thing in your head, right? Like in the double calendars, I'm exiting when I would exit, and if the automation can do it, which it can, with the short strikes, you can put deltas tied to the short strike. But um, anyways, this was in 13 minutes, I think 12 minutes or 13. But here's the thing, the good, the bad, and the ugly. When you're doing, and me, tell me if you agree, when you're doing the 30 delta, I mean, it's not unusual in 15 or 20 minutes to get a halfway decent profit, right? Just because it's a high delta, they decay quickly. But on the other hand, if these things move, if SPX, once you put it on in a low vol environment like we're in, moves 15 points either way, you could be down $100 before you say potato chip. Would you agree, Amit, on these things? They can they can go against you pretty quick. So, uh, yeah, you can get good profits if no move in 15, 20 minutes. And that's what so that's why you're trying to enter this, in the first half hour. We're looking for a low range day, maybe in the SPX, no more than 30 points or something. Generally, no news coming out that day. And historically, if you got the FOMC on Monday, historically, would you say, Amit, that Mondays, Tuesdays, and Wednesdays have been pretty decent for 0 day?